In today's Targets and Focus, we'll be taking a look at G10 pairs, pound dollar, dollar yen and euro pound. Joining me on the line is Chris Walker, FX strategist at Barclays. Chris, today the US dollar was hovering close to 11-week highs against the pound, with pound dollar dipping 0.7% to 150.28. What are your forecasts for pound dollar and why?
In the short term, we expect the pound to remain fairly stable around current levels over the next few months. We actually forecast it to remain at 150. But as we get beyond that horizon, we do expect it to push lower towards our 6-month target of 147. Partly this is driven by the sterling side of the story. The new governor-elect, Mark Carney, is due to start office the first week of July, and expectations are likely to build for a more activist approach to monetary policy. We expect him to incorporate forward guidance into the monetary framework in the UK, and while it's not going to be the massive gung-ho approach which many are looking for, it still should be a currency negative in the sense that as soon as data starts to improve, if they tie forward rate guidance to a specific date or event, that should aim at flattening the yield curve, which in itself should bring down the currency. But primarily the way we're looking for cable to move lower is a function of broad dollar weakness. We've seen some evidence of this. People have been repricing Fed expectations, and we expect this to be the dominant driver of FX markets as we move towards the end of this year.
And the dollar was down against the yen today and against other major currencies as the greenback's weakness against the yen weighed. What are your short and long-term projections for the dollar-yen pairing?
Yeah, we've continued to have the view on dollar-yen that it's a story of overshooting. And from current levels, we don't see too much scope for upside. So we forecast over the 3-month horizon dollar yen to stay around 103 before gradually moving back towards 98 over the next 12 months. The main reason behind this is that there is clear evidence that inflation expectations are starting to build, and the stickier that inflation is, the more the currency needs to weaken. So if inflation expectations are beginning to become delodged, then the currency weakness part of the equation is probably done. Now, there are risks to this view, and we don't want to pin an exact top on the pair, but various indicators, whether it's swap rates, usual orthodox inflation expectations indicators, or the performance of the stock market and JGB market, do suggest that the bottom in the yen is probably within sight.
Also today we saw sterling fractionally lower against the euro, with euro pound edging up 0.5% to 0.85. Why do you think this is, and what are your forecasts for euro pound?
Not particularly interesting in euro sterling. We generally forecast it to be flat over the next 6 months, principally because we look for some downside in both sterling and the euro versus the dollar. On the euro side, it's been effectively pinned to 130 ever since February. It's been in a 128, 132 range, and we don't see any real catalyst to push it out of that range. The reason we've had the move today is principally because you're seeing some pairback from the large dollar move yesterday. And on the sterling side, we had some specific retail sales data which was quite weaker than expected, in line with the previous retail sales numbers. So that's the reason why we've seen the moves today, but ultimately we expect that cross to remain fairly stable and trade more or less in a flat line.
That's all for now, but stay tuned to Dukascopy TV for more exclusive interviews and updates from the TV team. Goodbye for now.